Hi, you're watching Wall Street Confidential. I'm Deborah Borcher, and I'm talking with Jim Cramer. Jim, we had some unemployment figures come out today, and it's kind of a good side and bad side of the coin,
exactly
because
right,
the number is, on the one hand, horrible because we're hitting 7% unemployment, and there's just nothing good about that. And yet the market is kind of like, well, it wasn't as bad as it could be.
Well, I mean, look, there was an outside number. Sometimes there's a whisper number, and the outside number was 800,000. I put that in realmoney.com as the over, so to speak, in the football betting term. We didn't get that. December was bad. I mean, it's really running at around 600,000. What people have to recognize is that anything short of 10% is good. Anything. As long as you stay underneath double digit, you're okay.
Now, when we dissect these numbers, though, the two areas that didn't come down were education and health. Obviously,
Government.
Teachers.
Right.
But health, is there anything we can do off of that figure?
No, I don't think so. I mean, I just don't think there's a way to play health. I do feel, I mean, you know, it's interesting because health is CVS, pharmacy, doing terribly. Health is Cardinal Health, doing terribly. Health is drug companies, those I like, but those only do well during a recession. There was a belief going into today's session that things simply aren't that bad and can be getting better. I look at these numbers and I say, well, things simply aren't that bad, but they're not getting better. And you can't, you know, there's a lot of times in investing periods where there's really nothing to base a judgment on other than sentiment. That's where we are right now. And the sentiment remains very bullish. So if we get a piece of data that's negative, like Walmart, well, hold it. That says, well, wait a second, the people who are poorer aren't shopping. But then again, Target's good. JCPenney's a little better. Kohl's a little better. Maybe they're trading back up. So, I mean, there's enough conflicting evidence to make it so that people aren't sure what to do, but they seize on anything good and they kind of ignore anything bad, except for they take action if it's bad because when it shows that the consumer might be stronger than we expect. It's a little counterintuitive moment.
Yeah, it is a hard market to figure out. Is it
very,
really
very
just
hard.
a trader's
market?
Which
is what, yes, I've been saying that, look, off of this number, they could buy the Q, they could sell it. There is nothing here for 99% of Main Street traders. Nothing to do. Those who want to play sentiment can do it in the bear ultra. I think that will work.
Okay.
But, you know, we have a guy named Bob Byrne who writes for the realmoney.com. He's a must read. He's been calling this market every day. And it's technically driven. All right. And it's not fundamentally driven.
All right, so keep that in mind, folks. This is a technical driven market. Thank you, Jim. Deborah here. Stay tuned for more at thestreet.com TV.